Hello, everybody. Today is Thursday, January 18, 2024. This is the All-Star Options Jam session. So what we do here, if you're new here, this is where we review some positions that we have open that we've put on in the All-Star Options service from All-Star Charts. We update positions we've gotten out of, whether it's a win or a loss. Positions we may have made an adjustment to. We also update stops on existing positions that are going our way. And then we kind of do a quick overview of new positions we've put on since we last spoke here. But before we get into all that charting and all that stuff, I have to drop the old disclaimer here that everything we discussed here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn something from following my process. So as always, we like to start at the top, at the high level, look at what the broader indices are doing. And the S&P 500, I've said this, I feel like this is the third week in a row. We are bumping up against some upward resistance at a spot that would seem like a natural place for us to run into resistance. This is the January 2022 highs, which are the all-time highs for the S&P 500. We're bumping up against that area. No surprise, a very natural place for us to pause and gather some steam, perhaps, for another leg higher. We'll see. Is this the top, and are we going to roll over again and test October lows from 2022? Maybe. I doubt it, but maybe. But either way, we are stuck in kind of a sideways pattern, which is making it difficult, especially for many of our bullish trades this week. And of course, we always talk about the volatility index, and we did have a little spike up this week. Nothing alarming, but we are at the highest levels in VIX we've been in for the last couple of months. So that is worth noting, and that did factor into our decision making this week with a couple trades that we put on. But look, this week was all about gardening. I talked about this on the morning show this morning. Sometimes you just got to pull the weeds in your portfolio, right? The positions that aren't carrying their weight, the positions that aren't working. And we had a number of them that we had to get out of this week. None of them were terrible losses. I mean, every trade that we put on, in the worst case scenario, if we take the maximum loss, all those maximum losses should be similar sized, right? It's position sizing 101. You want to size your positions such that if you were to take the loss, take the full loss, doesn't matter what trade it was, every loss should be indistinguishable from the other. They should be similar sized. If you're doing it right, that's the way you should do it. All right. So that said, none of these trades that we got out of this week were full losses. In fact, we kept our losses pretty in check for most of these. MicroStrategy is the first one we got out of on the 12th. That was, when was that? Was that Friday? Last Friday, yeah. We were in a bull call spread. We got in on December 8th. And boy, with the Bitcoin rally that we saw, the MicroStrategy was looking real good for us. But I don't know if it's a sell the news event with all these ETFs that are coming out, that there's perhaps a better ETF vehicle now to trade Bitcoin versus using the MicroStrategy stock, which is what we've been using. The reason ultimately doesn't matter. What all that matters for us is price, and price told us that we were wrong. On the 11th, MicroStrategy closed below our stop loss level. We exited on the 12th, just soon after the open. We paid $21.50 to get into this spread. We got out for about 11 and change. So, you know, we lost 50% of our invested capital. Not terrible. I'll take that as a result on a losing trade any day of the week. All right, next up, Keycorp. This was a trade we got into back on December 6th. We bought June 15 calls for 90 cents. We had a nice rally soon after we got in. This green candle was in our favor. And then after that big move, we just basically consolidated, went sideways. And I was feeling like that was pretty constructive. In fact, we got into another bank trade, which we'll talk about next. During this consolidation, we thought this was constructive, but we raised our stop loss level. I didn't want to be in this position anymore. If we broke this area here of support, and that's what happened on the 15th. So we got out of these calls on the 16th, which was Tuesday. The good news here, the good news, bad news is that it was a losing trade, but a very small losing trade. Like I said, we paid 90 cents to get in. I got out for 83 cents on the 16th. So very small loss. No big deal. We'll move on. I wish all losses could be that way. Wells Fargo, here's that add-on trade that I mentioned when Keycorp was consolidating. Me and Straz and the team, we felt like we didn't own enough banks. We wanted more banks, and Wells Fargo is the vehicle we chose. We loved this breakout here. We got in on the 20th of December. But as you can see, when all the banks sold off this week, Wells Fargo was also a casualty. We were in the June 55 calls that we paid $2 for. Unfortunately, in this one, we lost a little bit more. We got out at 54 cents on the 16th. So we are out of Wells Fargo. The gardening continues. Lululemon is a trade we got into on December 15th. It was looking good, but it could not hold this support. This was the support level we were leaning on. We also got rid of this on the 16th. This was a bull call spread that we paid $15 for. We got out for $8.65 on the 16th. So a little less than half of a loss on that. Again, not bad. We sized the position such that if we lost 100% of our $15 debit, it would still be, an acceptable loss for the size of my portfolio. But hey, got up for less than half of that. I'll take that as a small, not a win, but a small consolation. Finally, Southern Comfort. This is the last trade that we've exited this week. We got out of this one yesterday. It's a trade we got into on December 18th. You notice a common theme, a lot of these longs, that they were all kind of entered in December. Things were looking great in December. We've run into that upper resistance in the S&P 500, and I shouldn't say a lot, but many stocks have struggled, including all the ones we've just exited. And Southern Copper was one of them, another casualty. We were long the June 100 calls, playing for the $100 roll. But the market had other ideas. We got out yesterday. We paid $2.20 for those June 100 calls, got out for $1 yesterday. So again, not the worst situation in the world. But those are all the trades that we had to play a little gardening on this week. It's never fun taking losers, but none of them were severe. So that's the good news. And the better news is that we still have many trades on that are still working, that are making up for these trades that were losses. And a couple of those trades that are working are trades that we're going to update some stops in right now. Republic Services, ticker RSG. We got into this on November 13th. We're long the April 165 calls. I'm moving my stop up to 162 now. We last updated our stop about a month ago. We're moving it up to 162 now. If we can't hold this level, then that would be a signal to me that RSG has run out of steam and I don't want to be in it anymore. And we will get out and, hopefully our loss won't be too small or too big. Should be pretty small at that point. Next up, IBM. IBM is looking great, especially for big cap stock. We're long the June 170 calls that we paid $2.94 back on November 20th during this breakout here that's kind of highlighted. We had a little reaction last week, but then we went back to new highs this week. So I'm using this little reaction here last week as the level I'm leaning against for my new stop. 159 is the level I'm leaning against as a stop for IBM going forward. And lastly, Datadog. Here's another trade that we're really liking the looks of. It's breaking out above multi-month, over a year resistance level here. This could be a long-term reversal pattern that we like. We're long the July 120, 150 bull call spread that we paid $990 for. When did we get into this trade? We got into this trade on December 4th. But now we are raising our stop to 115. As long as we could stay above 115 going forward, we're going to keep this trade on the books and let it keep working. Hopefully head towards our profit target. That's all the updated stops I've got for you this week. We have two new trades since we last spoke. First up is Tesla. We put a delta neutral trade on in Tesla. I'm not going to get into the details here, but I'll just let you know Tesla is a delta neutral credit spread type trade. And Archer Daniels Midland, we put a bearish trade on this one as a little bit of a portfolio ballast for all the long trades we have on. If you want the details for all these trades, shoot us an email, info@allstarcharts.com. You can get all the, well, actually, before you do that, go to our website, go to allstarcharts.com, go to the members section, go to the options section. That's where you can find all the detailed trade plans for every trade that we put on. We put the setup, the why we like the setup, what's going on in the chart, why we like the trade, the strategy we're using to trade it, and then a profit target if we have one, and a stop loss and how we're getting out of the trade. All those details are laid out in the blog post. You can find them at allstarcharts.com. If you don't have access to that, shoot us an email, info@allstarcharts.com. We'll get you hooked up. And also, please sign up for our free options newsletter that goes out 2-3 times a week. I talk about options trading. I often share a trade idea, a whole trade plan, at least once a week. And it's all free. Again, info@allstarcharts.com. Hit us up there. Until next week, I'll be back next week with another options jam session. Until then, take care. Have a great weekend, and we'll see you next week. Bye-bye.